Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, January 14th, 2013. All right, I hope everyone had a good weekend. Let's start off by looking at the S&P futures, the E-mini futures. And as we can see, we finished near the top of the range on Friday after this huge move up on Thursday. And it seems to be pushing forward. It kind of kicked off the 8-period moving average and wants to move forward. It's right now up 100 basis points, 1.00 on the S&Ps. And T1 is above 0, T2 is above 0, T3 is still a little bit below, T4 is a little bit below, and T5 is above. As I said on on Thursday night for Friday's video, that everything looks rosy, and that's what makes me nervous. So it looks almost too good to be true, and I want to scale back here and show you a bigger picture. All right, you notice this high in March of 2012. This higher high, September 2012. And now we're going for a matching high, or maybe a little bit higher, January of 2013. But also what I want you to notice is, look at this green line, this green wave here, when it crosses over at the first peak, and the green wave when it crosses over near the second peak. And the third one it's not crossed over yet, but it may be heading in that direction, and I'll tell you why I think it's heading in that direction. The longer waves, which are not really good trading waves, but they give you a very, very interesting long-term perspective. All right, let's look and see what wave number. Okay, the longest wave in my arsenal in T5. This is Triton Wave 5, otherwise known as T5. At the peak in April of 2012 is, you can see the number on the right here as they move it up. This is at 143. Okay, the next peak, higher high in the cash price, is 134. Next peak, higher high or equal high, is 97. If we look at the green line, the green and orange are matched up pretty well here. That's 85 at the peak. The next peak, higher high in the cash, but the wave on T3 is only 37, and this matching high is only 15. And not only that, T3 is actually half of the wave is below 0. So, big picture, we may inch up a little bit. Any bad news is going to drive this thing down for 40, 50, 70 points on the S&P. You have to be ready. Don't be caught long without protection. And maybe it's time to take some off the table. In fact, I strongly recommend it. So let's look and see what the 21 did. The 21 period moving average. Okay, we can see this on T2 made a decisive move above 0, and then on T1 started to come back down again, but it went back up again on the 9th of January and continues to be higher on T1 and just barely on T2. T3 is kind of edging down a little bit. T3 and T4 are kind of going sideways. So yes, we're up 1 point on the S&P, no big deal. Or actually, it's kind of moving right now. I'm looking at things like the dollar. The dollar is moving down. Let's take a look at the daily picture. The dollar is moving down, so that means the market might be moving up. All right, let's take a look at gold prices. Usually move with the market. and that seems to be up a little bit, but it's trending down. The Euro USD is spiking to the upside, which means usually U.S. equities are spiking up. So there are certain things that are telling us on the foreign exchanges and the dollar. Let's see what treasuries are doing here, actually. I don't have a treasury one. Never mind. They're going up in they're looking. Let me see what this looks like right here. Zoom. All right, this is the dollar. I'm sorry. This is the euro versus the dollar, and it's moving up. Not near about the highs, near the highs that they were in March. March February area, which is about the highs that the S&Ps were. So you can't really see from here, but this is one of the reasons why the market keeps moving up. And Europe is really not out of trouble. They just like the euro. Let's take a look at the Aussie yen cross here. Aussie yen keeps on moving up. Now, this was perfectly in sync with the Dow as the Aussie dollar moved down, risk was coming off the table, and the stock market was going. All right, I just had to do a little calculating. I wanted to see what exactly I was doing a comparison between the Aussie yen and the S&P, and actually they were tracking really well. So, just as a summary, when the Aussie yen goes down, then it's risk off. And it's risk off, and the market goes down on the S&P and the Dow. When there's risk on, then the market goes up, and the Aussie yen goes up. And then this is risk on, risk off, risk on, risk off. And that's where it stopped following the market. Now, if you just go by this, then our stock market, if this were still tracking, then our stock market would probably be about, the S&P would probably be 1,500, 1,520, because this far exceeded any moves to the upside on the correlative Dow index. So what does this mean? If we're just on this left-hand chart, if we're just from peak to peak, this is September 18th, and this is today. Okay, so September 18th. September, where are you? September 18th is here, in this little area, and now we're up here. So the question that I have in my mind is, if Aussie yen is having a risk-on trade, that means that they're still borrowing a lot of Japanese yen at almost no interest rate and investing it usually in Aussie dollars. Sometimes they're investing it in U.S. Stock market, which is what they were doing on the left-hand chart here. And it was tracking perfectly. It was a wonderful correlative indicator until this decided to take off, and our stock market is only matching the September highs, which on the Aussie yen is only back here. So where's this money going? And I believe, obviously, it's not going into the stock market. So either we're in a push to go like 1,000 points higher, which I don't think is going to happen, or it's going into bonds as a defensive move. So that's why that's one of the reasons why I don't like the market, not just because the correlation is off, but because these lower highs on the waves on T1, T2, and T3, even as there are higher highs in the cash price, I'm sorry, well, this is actually the futures price, it's not is not indicate a good indication of an upside potential. And everything happens in threes that I've ever observed in the market. This is one wave, two waves. This is wave number three. We may be at the absolute peak. Watch out below. Okay, if you are a day trader, and as I said in the Friday video, there was close to 38 points in the past 2.5 trading days. That did not let up. There was a sell. There was a sell right here on Triton wave number 2, T2, and then there was a buy back in here right around 11 o'clock. So if you have the ABC waves, then you could have followed along, done your own trading, and these the same thing happens. Just follow the look at as I'm moving the cursor across above and below zero on the blue wave. You can see what the price above is. Crosses here, 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 and on Thursday, late Thursday at 1 o'clock in the morning, it started crossing back down again. Hit the 377, and then it crosses back over. It's a little bit up and down here, but it for sure crosses over at 14:12, 2:12 Central Time on Friday. And as you can see, this looks like it has a little more upside. Just beware of the bottom. Beware of the bottom falling out unexpectedly. Okay, tonight I am going to highlight Apache Corporation Oil Company. Just a side story. I met somebody who was a trader, and we were talking one evening, and he said, "I'm buying calls on Apache because it's going to move like crazy to the upside." And he bought some 90 calls and expected it to go to 95. And I said to him, you know, there's more of a likelihood that it's going down. I'll have to check them on my waves. Let me check them out, and I'll get back to you. He said, no, I already bought them, and they're going up. I know what's going on with the oil industry, and this thing is absolutely golden. So this is where he bought them. He bought the December. Actually, he bought it. It was back here, but he bought the December calls at 90 when it was like when it was around 77, 80. Maybe about the January ones. My point is that I took a look at it on my graph, and it looked like actually he bought the February calls. I took a look at my graph, and he bought them somewhere around 80, thinking that they were just going to because it had already made this move from 75 in 5 days. It was 80. That it was just going to keep on going and going and going near these old highs. And let's just take a look at what Apache looks like on. So it's been to 100, it's 112, it's been to 133 way back here, and in 08 it was 149. So that's what his thinking was. All right, so this is what happened. What happened was that I came back to my place, and I pulled up Apache APA, and just at the peak, I thought to myself, you know, like, I have no way in getting in touch with the guy, but this is just going south. The next 5 days, it went from 80 down to 76, made it up to 84, and then came back down again. Now look at all these waves in perfect harmony with the peak, the trough, the turn, and then the peak, the collapse, and now the trough, the turn, and it's basically been going sideways. It looks like it's going sideways. So, needless to say, he lost a lot on his position if he wasn't already stopped out. So it's just basically you can't buy stocks just because they look good and a hope and a prayer that you know what's going on in the oil industry, because unless you can confirm it by actual action of what's taking place on a closing price. Fundamental information is will whether it's true or half true or filtered through Fox and CNBC is only half the story. The real story is the closing price and what the waves are saying with the closing price. Okay, that's all I have. Have a great trading evening, and I will see you at the next update. Just to let you know, if you want to get in touch with me, I'm at tritonwaveguy@gmail.com, or you can follow me on LinkedIn at Rodney Julian at LinkedIn, or at Rod Julian on Twitter. If you want to participate yourself and trade, the ABC waves are available on this link right here. You can't copy and paste this because it's on a PPT, but PowerPoint. But you can just like write it down or call Trade the Markets at this number, and they're available for trade stations, Sierra, eSignal, and Ninja Trader. I am also available. I started a concierge consulting business. I'll let you read that. I'm just going to buzz through it, but they're tailored to your individual needs. And if you want me to look at your portfolio and give you an analysis using the Triton waves, just give me a holler, shoot me an email, and we'll set up a video for you. It's the only service. It's one of the only services that I know of will give you a personalized video of a stock that you want addressed for a buy or a sell. Have a great evening, and I will talk to you soon.